Hey everyone, welcome back to Chasing Returns. This is episode 7. My name's JJ,
I'm Zach.
and let's get right into it. So, Zach, I think you have something you wanted to bring up to start us off today.
Yeah, I'm going to talk about Warren Buffett again. No, I'm kidding. I'm going to talk about Carvana because I was checking the stock prices recently, and I noticed Carvana is at like 22 now. And in August 2021, 10 months ago, it was 360. So it's a 95% drawdown. And I think I know this company pretty well. Well, I do because I was an intern there 3 years ago in the accounting department. So I don't know. Do you want us to give a brief overview of the business or?
Yeah, let's run through it just really
Yeah.
briefly because some of my concerns regard something else, which is after you understand the business or at least what they go through. But since you work there, yeah, let's hear what your quick summary of the business is.
Yeah. So the whole thing is about taking the hassle out of car buying, used car buying, because basically buying cars at a dealership is one of the most hated processes in the world. And Carvana's idea was, oh, well, why don't people just buy cars online? Like it's like you're shopping on Amazon, but instead you're shopping for cars. And then you get it delivered straight to your home, or it gets delivered to a vending machine and you go pick it up, which is a pretty cool process because I think they give you like a huge coin, you put it in, and then you see your car come down. And then you can sell your cars to them as well super easily. So sometimes I go on their website and just you put in like your license plate and it gives you a cash offer, like a legit cash offer. I don't know if they slowed that down recently though, but yeah, I think it's a really interesting idea. The one pushback they had in the beginning was people want to test drive their cars
Yeah.
before, but they have like a 2-week return policy. And I think very few people actually return their cars. So
I feel like that's a big thing outside of Amazon, but I feel like that's like a big thing with like clothing as well. I can't remember what's
oh yeah,
the is it Stitch Fix maybe, where it's like you can order a subscription box, you get a bunch of clothes, and anything you don't want, you send back.
Mhm.
I really wonder, and I'm sure the numbers out there, what percentage of the things that get sent that you choose do people actually return? Girls might be a little bit more picky with that. But it's one of those things that I feel like the hassle of returning an item is so much. And
Yeah,
granted, like I said, Carvana is very different because you have to go to a post office or not. But I'm sure it's just that the whole idea of like, oh, I need to fill out all this paperwork to return it when you've already thought about the car you're going to buy. I think there's some human psychology there of like it's not worth it. It's like it's good enough once you get it.
yeah,
But yeah, because I'm definitely one that I would want to test drive. Um, Granted, though, the only thing I'll say is it's like, which is awful, but I mean, it's what you see with a lot of things is it's like you could just go to the dealership, drive if it's a somewhat new car, like say the last 8 years, it's probably gonna be similar to whatever the new car is in the dealership. So at least you get a feel for it. Like my car, I drive a Ford Edge and the brakes are so touchy. My car was a 2015. The 2022s are still touchy. Like it's a thing with
yeah.
Ford, I think in general, but then it's also a thing specifically also with my car. So it's
But
one
you
of those
get
things
used
where
to it over time.
yeah, well, and like I said, it's that style of cars, but it's one of those things of like you almost could just drive the newer car or find even a used one at a dealership and then go buy it through
True.
Carvana for probably a better price. Which
Yeah,
is like, I mean, think of everything with shopping on Amazon. Everyone just goes to stores, tries things, and usually orders it on Amazon because it's cheaper.
yeah,
But so I view that's probably part of the reason with that. But yeah, Carvana is a really interesting business, especially seeing all the vending machines go up. Obviously, I've seen the ones go up in Arizona. There's one now right off the main highway next to the strip in Las Vegas. Definitely interesting concept. And yeah, so I was gonna say, so that's the brief summary. You want to get into the specifics of what you want to bring up about Carvana?
well, okay, first you mentioned fashion. I invested in a company called Revolve and they have ridiculously high return rates. Like I think it was 50% of their sales basically get returned, but that's off topic. I think it's
Interesting.
just an
Okay,
interesting
well, maybe
point.
that's a subject for another topic
Yeah,
thing.
yeah, but I think, like I mentioned, I'm pretty sure Carvana's return rate was really low, like surprisingly low.
Gotcha.
Um, Regarding the business, So yeah, like I said, I was an intern there in the accounting department. Um, what I will say is the work culture and the environment was amazing. Everyone there, it was very relaxed. It was like casual clothing, but everyone there seemed to really enjoy their jobs, really love the company. The CEO is a really cool guy, um, very young, and everyone was very motivated. And um, so I thought the work culture was amazing. Regarding the financials, I never invested in the company, um, which for the longest time I looked like an idiot because when I was there, it was like 60 a share, and like I mentioned, it was 360 in or August of 2021, but now it's at 20, and now I look smart. The reason I didn't invest was because yes, they had ridiculous growth. It was like triple digit year over year growth for their entire existence until recently. Um, and then you had improving gross profit per unit. You had declining SG&A as a percentage of revenue. So you have all these great metrics. The issue is they're still highly unprofitable. They're still burning cash like crazy. And when that happens, you're heavily reliant on financial markets to raise cash via debt and equity. So your share count's going up over time, your debt's going up over time. And something like that is just way too hard for me. So I never bought. And um, but the opportunity is enormous. It's a really fragmented industry. So if they can get significant market share, they will become very profitable. Um, so it's a really interesting situation.
Yeah, see, obviously we'd always talk about it and whatnot. And I was definitely looking when I'm back when my portfolio was a lot smaller in terms of companies that I was diversified in. I was definitely wanting to get into the car market because I mean, I've mentioned before, I've been investing since like 2016-ish, but I didn't really have much money in my account until 2020. I came into some cash, started working, whatnot. So I was able to invest more, which obviously was a good time. Um, but I was wanting to get into a car play, but I've struggled with one issue, and that's if we're going EV, what are we going to do with all of the gasoline cars? And
Yeah,
if you are a used car business, you're going to be buying up gasoline cars,
yeah,
especially if everyone's converting to EVs. Who's going to be buying the gasoline cars? And if you're offering to buy their old car for them to convert to an EV, you're just losing customers year over year. So, and obviously, eventually they'll start getting EVs, and I'm sure they already have some for sure. But like I said, if their whole thing is that we'll buy your used car, to resell it, and obviously, they calculate the price. The problem is, I just struggle with the idea of the future of it for the time being, of why we're going through this transition. Because I think it's a brilliant idea. It's a brilliant model. It's cool. I mean, it's kind of trendy in some ways. It's very different.
yeah.
Um, like I said, what's the main competitor that goes to your house?
Vroom.
I was gonna say because it's between those two as well.
Yeah, but I don't
But
know
doesn't
anyone who uses
Carvana
Vroom.
also deliver as well as an
Yeah,
option?
Carvana delivers. Yeah,
Yeah, I was gonna
most of
say,
it is delivery.
yeah. Because I was just gonna say, I remember, I think it was from Broom. I think their advertisement wise was very big on the like we'll pick it up, whatever. But I think Carvana offers that as well.
Oh yeah,
But
Carvana does.
I just always remember those commercials. But yeah, like I said, I'm a little concerned with the turnover rate because, like I said, it's like you're gonna have people, selling off one thing and buying a completely new category, of which your inventory of a used car is going to be very slim, especially since I think the American average, like, um, for the age of a car, it's like, isn't it like 12 years old?
I'm not sure.
I'm pretty sure. I think it's like it's at least 7. But for some reason I think it's 12. But the average, yeah, like the average American the average age of a car is 7 to 12 years old. We'll just go with that. And if that's the case, like I said, and say in 10 years when EVs, are pretty prominent, the people that have the EVs probably aren't going to be selling their EVs. So
Yeah,
it's like that's the only big issue I have with Carvana. Outside of that though, yeah, like I said, it's a brilliant idea, it's a brilliant model. I Yes, CEO head, I've heard great things. Obviously I heard great
yeah.
things from you as well.
His
Um,
dad is a little like sketchier. I think he went to prison for something, but um, the CEO of Carvana, Ernie Garcia the third, he's a really, I liked him a lot.
that's
Awesome
awesome.
guy.
Yeah,
Yeah.
it'll be interesting. If it dips low enough, I'll buy it. Actually, this just reminded me of something. And I did hear this through another creator of which I am a fan of, which I've talked about with you, which is Jeremy from Financial Education. He was bringing up Robinhood, which I am a stockholder on. I own a decent amount of shares in. I've been getting my cost basis way down because I mean that thing IPO'd and I think was in like the high 40s at one point, and now it's below $10. And he was saying if it hits, because I think it's at 8 right now, if it hits $7, their market cap equals the amount of cash they have on their balance sheet.
So is that like excess cash though, or is that because does that take into account debt? Like if it's excess cash, then
I'm pretty sure it's excess cash.
so
We can follow up on this next week.
yeah.
There's just something I wanted to bring up considering we're talking about. I mean, most things are trading extremely low right now, but Robinhood was one just because I'm an owner in it and I've been adding to it frequently. It's just, yeah, it's one of those things. If it's crazy, the fact that something could get down that low and the market not, view that as a buying opportunity. And I know
Yeah.
I know Fin like tech has had a very, very rough like year and a half, pretty much since all the hype, uh, but yeah, Robinhood's one because I mean, my second account, second brokerage account is Robinhood. It's probably only accounts for 20% of everything I own. But honestly, I do love the platform. I think it's great. It's easy. It's slick. I mean, it's been compared to a social media, which is probably what they were going for. They've gotten in trouble for the gambling mentality of kind of gamifying investing, obviously through their options trades and all that. I don't do any of that, so that never concerns me. But like, I use Schwab and then I use Robinhood, and I'm like, Schwab needs to update their interface.
Oh,
Like
I
this,
like Schwab's, but I guess I'm
it's
used to
just,
it.
it's like I said, I don't have a huge issue with it, but it's just one of those things of like, I just feel like it could be a little bit modernized. And I'm not, like I said, that has nothing to do with functionality at all. But it's just one of those things of I just view it. It's like I feel like it could be pretty easy for a lot of these, like for a fintech to come in, like a Robinhood, to eventually be a massive player to take market share just based off of user experience for the younger demographic, which is why I think the appeal of Robinhood was. The problem is I think people graduate from Robinhood and then go to a Schwab or Fidelity or whoever else, which has kind of always been the joke, is the fact that it's your first brokerage account and then you move on. But yeah, it's just an intriguing thought, and definitely also a one where I might be buying a lot more because I just don't see Robinhood going away. At least not. The other thing is too, Robinhood could get so it could get bought out by another brokerage.
Yeah. Yeah, I could see that.
So I don't know. Any thoughts on that, or have you seen any other extreme buying opportunities?
I mean, the things I own have come down and I wish I could buy them, but I just don't have much cash lying around. Like Berkshire is back low 290s, I think. There's a small community bank I own that I would buy a lot of right now if I could. And I started a new position in a home builder, an industry I know very little about, and that I will probably get smoked in, but it'll be a good learning experience. So do you want to transition into that, or
Yeah,
do
let's
we
go
have
into
any?
it. What prompted you to buy it? What do you think you're not as informed in on the home builders?
Okay, so the home builders, they look on the surface extremely cheap. I mean, they're trading at like 3 times earnings, 4 times, 5 times earnings, and some of them are trading around or below book value. This one that I bought, which is M&I Homes, tickers MHO, trades at like 75% of book value. Now, obviously, the market isn't stupid. They're not going to price a good company at 3 times earnings. The market's anticipating a massive decline in new home sales.
Yeah.
But so this is sort of like my Activision bet, is I have no idea what the future holds, but I'm basically assuming the worst case scenario going forward, and I still think the investment works out because if you're trading at 75% of book value, the company could sell all of their existing inventory of homes at cost, when in reality, they're going to sell them
Yep.
at a profit. But if they sold them all at cost and then they just liquidated the company, then I would make like 30% basically.
Yep.
But obviously they're not going to liquidate. They're going to keep building homes. They're going to, I think they said in a conference call, they're going to look at repurchasing shares. A lot of investors were in the call, were pushing them to do that. And in the best case scenario, maybe home demand stays strong because there are favorable demographic trends. There's still a supply imbalance where the market is undersupplied. Just coming out of the Great Recession, home building supply came way down and it still hasn't caught up. So I just think this is a situation where my downside is small and my upside's massive.
I completely agree. Like I said, that's kind of what I was obviously we had teased that we were going to talk about that. That's where the Robinhood briefly came into my mind.
Yeah.
Because I saw that kind of as a similar situation, except the home builders is a very, very different markets, and definitely something that, like I said, is up for debate of what's going to happen. And obviously no one truly knows.
Yeah.
My bet still is that interest rates are going to just halt people. I think new builds are going to continue because, like I said, they're going to see the opportunity, the fact that there's still low inventory. Is it going to slow down? Probably yes.
Yeah.
And
Definitely.
I just can't see an economy where our housing market can stay where it's at. With you're going to have some people with their hours cut where they're going to be making less money. You're going to have some people getting laid off. So you're going to have a very large part of the workforce, maybe not, like I said, maybe not being unemployed, but definitely having their, hours cuts, their weekly paycheck goes down. And there's going to be, like I said, a part of the workforce that is just laid off because they're just not going to be needed the next 2 years. So I can't see demands maintaining. Rents is what's going to scare me, because I feel like a lot of people are going to be moving now into rentals because they can't afford, and maybe they're somewhere else, or you're going to have to start finding roommates or moving back home with your parents or whatever. So that's my big concern. I think we're going to see a pretty bloody housing market for the next.
I mean, that's what the market is saying. That's what Mr. Market's saying when
I was going to say, I mean, all those companies are going down like crazy because it's, who's going to pay for a new house with these interest rates? I mean, unless you can pay it in cash, it's just like, which some people might be able to do. If you've sold your house, near the top of the market and you've been renting, you've got plenty of cash to now go out. You're waiting for houses to fall. And even if you don't, like I said, pay it in full cash, which I mean, that's obviously very hard to do. But if theoretically, if you sold out of your house, you are sitting on a lot of cash right now. It's like even paying 50% in down payment. It's like, that's a lot of people are going to be able to do that if they were able to time it correctly. The problem is that's just not going to be, the case for majority of Americans. So yeah, I see rents staying pretty much the same. I don't think rents are going to come down. I don't think rents can go up much more. They're almost too high for people to afford. But I definitely see probably housing. I mean, you're already seeing listings kind of, go up. And I think there was a trend for 15% drop in asking price, or 20% I saw recently reported across some markets. Our market's going to be interesting in Phoenix because there's still low supply and there's a lot of jobs here and a lot of people moving here still.
Yeah.
So that's one concern I have in the Phoenix market. But in terms of for across the country, yeah, like I said, things have to come down, especially too, because I don't see interest rates coming down anytime soon.
Oh no, especially with the with inflation continuing to run really hot.
Yeah.
You got the Feds basically, they're just going to keep raising rates. Like their number one goal right now is to get inflation down, even if it creates a recession, kind of like the
You have
80s
to.
with Volcker. So
That's what you have to do. And then you have people transitioning into bonds, which is also good for the government, or I guess Fed.
Yeah.
Good for the money supply. Let me put it that way. But I mean, that's the one thing we've never, I mean, in our lifetime, I don't think we've ever considered buying bonds, but now would be a point where I actually would look at it and be like, maybe.
Yeah. You mean like corporate or US Treasuries?
US Treasuries.
Okay. I mean, you still like the 10 years at 3%, and that's pre-inflation too.
I know.
So that I still think no, but corporate bonds, there might be some interesting
Yeah.
ones to look at for sure.
It's just one of those things, which just I just see those increasing. If rates stay high, both those are gonna go up because you're gonna have people pulling out and transitioning. But like I said, could be wrong with that. Yeah, could be wrong with that. It's just something, it's like there's a reason why I feel like our parents or a lot of older people I know, like they were always in bonds. It's because they always had high interest rates.
Yeah, my dad told me my grandpa owned some CDs that yielded like 16%.
That's my point. I mean, I
It's
don't
like,
think we're ever gonna get back to that, but it's one of those
yeah.
things of like, say it reaches 5%. And I don't, if you believe inflation's not gonna be, it's gonna come down at some point, it's like,
I don't think, I still wouldn't like, I think
I don't
you and I
know.
should be targeting 10% returns.
Yeah, but you also have to realize like we're in a different timeline. We're the ones that, might not need the cash. Like if you're in retirement,
Well, okay, well, why would you buy a treasury at 5% if you could buy Apple at 20 times earnings, which is basically a 5% yield? Like Apple will keep growing over time. It's more of an inflation hedge because they can just raise prices.
yeah, but like I said,
Like,
we're talking about the people that might need cash now that pull money out of the market every year. Like say you're retired.
yeah, but I would just rather hold cash then,
Like I
because
said,
then,
I would too. I mean, I'm probably never gonna buy a bond unless rates get so ridiculous, like the story you just mentioned that your dad told you.
but
I'm
also
just saying
if,
in general, I do think there is a demographic where they want to be extremely risk adverse.
Yeah.
Because they've seen 2020 happen. Obviously, that bounced back quickly. Who knows how long this is gonna last? I don't know. Like I said, I think there's a small selection of people that are older out there that probably just want to have enough money, and they don't want to see their portfolio down 20%.
yeah,
And that's where I'm just saying, like I said, if you're below 30, maybe even 40, I don't think bonds are for you because there's too much of a buying
I don't
opportunity and
think
you're
they ever
probably
are.
working.
Because even if, like I mentioned, in the 80s, you could get a CD at 17% or 70s, 80s. Well, stocks at that time are probably going to be priced for like 20, maybe 25% returns going forward. Some, not the entire
Yeah.
market, but you'll be able to find, like back then, I think Buffett was buying, he was buying great companies at like 4 or 5 times earnings. It was just like shooting fish in a barrel.
Yeah.
So
I don't know. I just view it as like, look at how many people sell out of the market and then just don't buy back in until, things start going back up because people are just, they don't want to park them. Most people, I feel like I said, there's the trend's kind of shifting in terms of obviously, buy the dip is becoming a really popular thing. Granted, it's always been, something that's probably been encouraged. I definitely think more of like retail buyers are starting to buy into that. The problem is you need to have the cash to be able to do that. And two, you need to have the safety net of you not needing that cash. And going into a recession, you might not have that luxury, which is, like I said, why I think some people pull out. But it's also, like I said, it's just you don't want to risk all of the money you've been saving the last 6-8 years, especially if you want to buy a home or you have a big purchase coming up. You're not going to be parking that in the market.
yeah,
But like I said, people that have that and like are extremely risk adverse and maybe think the stock market's a scam. If you give them a promised return, I like I said, I think there's a large amount of buyers out there that would prefer that over the risk of the stock market. Because there's a lot of people that don't like the stock market and definitely think it's rigged. And to some extent, there might be an argument on the rigged side. Granted, like I said, it benefits everybody in some ways, but I definitely think, there's some parts of probably foul play in the stock market, at least for, short term. Long term, you're always safe. Knock on wood, if you live in America, that is.
if you buy good companies.
If you buy good companies and you're
prices.
invested in America, the big old,
Yeah.
I'm going to name drop it. We said we weren't going to bring it up, but Warren Buffett,
Oh yeah,
it's where you want to invest. Like I said, Japan, obviously, since their recession, what they still haven't recovered. But if you've been buying year over year, it's like you're still making a good return. You just lost what you had 30 years ago. But yeah, I don't see the US ever getting to that extent now. I think we have too strong of companies.
yeah.
What else? I feel like there was one more thing we wanted to touch on with that. Oh, another thing too. Have you been tracking the price of lumber? Because obviously, there was that huge shortage. Especially with houses getting built and whatnot, and also the supply chain obviously limiting it.
I think it went way up, then way down, then way up, and now it's down again.
Oh, I think it's down like 50% right now.
Yeah, so
Which I only bring that up because that's like I said, maybe an indicator for housing.
it could be. It also means that my home builder, like their costs go down.
Correct. It goes
So
both ways. Goes both ways.
yeah, but like I said, I know nothing about home building, so this investment I made is partially educational. Whatever happens, I'm gonna learn
Yep.
whether, yeah. So
I don't think the home builders are a bad spot to be in right now. Like I said, it might be flat for a bit, but once we pull out of this, it's like that's when things are gonna bump back up because eventually, real estate, hits its highs again. The only problem is, is your return going to be limited based off of other opportunities? So is there an opportunity cost of where else you could have parked your money? But I definitely think at these prices that, like I said, it's probably a pretty safe bet if you're not going to lose money.
I mean, I could,
As I said,
for sure.
over time.
Yeah,
And
it's just, they don't have that
nothing's
much
safe.
debt. Yeah, below
Nothing's
book,
safe.
I don't know.
It's like you said, though, it's like you could liquidate and, you could bring it all back. And obviously prices could crash. But even then, it's like your loss is probably going to be very, very small. I don't know. Like I said, real estate's always one thing that I feel like, long term always is going to hold value. Like I said, people always need homes. We've had a shortage of homes. Granted, our population is shrinking. So that is one thing. Like I said, eventually, maybe we reach too much where we don't have enough to replace it. Especially as baby boomers, maybe, end up moving out of their houses. But there's always needs for new homes. People always want new homes. And that's the benefit of home builders. So that's where I think a lot is safe. But yeah, no, I think it'll be interesting to track. I don't think I'll be parking any cash there anytime soon. I think tech for me right now is just too easy of a play. Not saying things can't get worse, but just, long term, 3 to 5 years, like it's hard to bet against Apple, Microsoft, Amazon, Facebook, maybe, but I guess our Meta, I guess. Did you see they're changing their ticker as well?
Yeah, I think they did change it last week.
I was surprised by that because Google obviously has kept theirs.
Yeah.
They never switched to Alphabet or whatever.
They're very serious about this metaverse thing.
Yeah.
But anyway,
I
Go ahead.
think they're very serious about the metaverse. I completely agree with that, but I think it's the branding because I think Facebook has such a negative connotation to it. I think mostly, honestly, it's a branding issue, especially too because they've expanded what they bought. What they own Instagram, they own WhatsApp, they bought Oculus. Like they're not just Facebook anymore. So I think,
Yeah, I think if you spun out each of the parts, I actually don't know, but I think there's a good, Instagram would be the most valuable. I'm not 100% sure on that though.
yeah, WhatsApp's definitely up there because like WhatsApp's used by so many people internationally.
Yeah, but I
blows me
feel like they
away.
haven't monetized it yet, is what I've heard. So like it has a lot of users, but they haven't
Yes,
monetized.
but the only thing I'll say to that is how do you get so many? Because I have WhatsApp because that's what I used in college for my team.
Mhm.
Dude, you get so many like scam texts on there. Your
Yeah.
information is definitely being sold.
Yeah, but it's like Twitter. Twitter has an enormous reach, but they have done a poor job monetizing it.
Correct.
So just having users, yeah, Snapchat even has more users than Twitter, and they are still deeply unprofitable.
Yeah, because you never
So-
I never scroll to the explore page where there's all the sponsors.
On Snap, oh yeah.
I know they tried hiding the stories over there so you'd click on it. I never click on any of that stuff.
Yeah.
So I don't know. It'll be interesting. Let's definitely, like I said, be following housing. So I think that's going to be the next kind of big thing to follow because obviously stock market's already down big. I think housing is probably going to be obviously the next big indicator people are going to be looking at to see what happens to it. But yeah, I think good conversation. Really liked the Carvana. I'm glad that you brought that up.
Do you think you'd buy Carvana anytime soon? I personally wouldn't
Evaluate-
until I saw evidence of improving cash flow.
Valuation would
situation.
have to go down a lot more because, like I said,
Well, it went from 62 billion to 4 billion.
as I said, it's just the EVs worry me because I think that is the way we're going, and
I did have a pushback on that. I don't know if we have time.
we have 3 minutes. So if
Okay.
you can do it quickly, let's hear
So
it.
the EVs, governments are targeting like 2030. They want majority of new cars to be EVs, but
Correct.
obviously a lot of people aren't going to be able to afford new EVs. So we're
Correct.
still going to have gasoline cars for a long time, I think.
I know. like I said, it's one of those things of obviously the transition is going to happen slowly. I'm just saying though,
There will be
I
used
view it,
Teslas by 2030.
huh?
Carvana will be selling used Teslas.
Oh, I
They
mean, I'm
already
sure they
do.
already are.
Yeah.
I'm just saying is the problem is they're, dealerships part of the business is you're buying up the old one. People usually don't buy a car without selling it. So even we're there, the last 10% that are selling their cars, Carvana is not going to be able to resell those.
I don't know.
It's just like
We'll
I said, I
see.
think it's going to be difficult. I think there's going to be a certain demographic where there's a large portion where it's like the last push and no one's going to be buying their cars, but someone has to buy it for them to be able to afford the new car. The new used car, that is.
We'll see. It might be a situation where like maybe there's a 90% chance Carvana goes to zero, but there's a 10% chance at 20x's.
I
Then it makes
completely
sense to
agree.
buy.
I
So
completely agree.
maybe I'll look at it. I don't know.
Like I said, it's definitely a company I'm intrigued by. It's just one of those things of like, I can't justify that risk in my mind, like logically thinking about it, based off of, like I said, other opportunities. And the bigger thing
Yeah,
with that as well is it's just like used cars have been so inflated the last, obviously, since, Corona.
Yeah.
And just that's the other thing that worries me, because that's why the valuation went up so much. And you're even still seeing cars overvalued used. It's starting to come down finally, but like, I think they hit a really big hot market, and it'll be interesting to see how they slowly now grow in a normal market.
Yeah.
Or even a down market, I guess I should say, because obviously that's what we're in.
Yeah. Well, I'll just conclude by saying the best risk reward in the market is Berkshire. Still.
I think, like I said, we're always going to agree on
And
that.
I should probably just go 100% Berkshire,
Yeah.
but I won't.
Well, thank you everyone for watching. We'll see you next week.
See ya.